Good morning. I hope you had a good weekend. Let's take a look at what happened last week in the markets and let's talk a bit of what we can look forward to this week. My name is Alejandro Zambrano, and before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk and we may lose all of our invested money. As well, I'm going to share with you my point of view on the markets and provide my levels, but it doesn't mean that it becomes investment advice. Always do your own research. Okay, good. So last week was actually a bit boring. At least that's what I thought. And there was not too much activity until the very end of the week when we saw stock indices, in particular the Nasdaq 100, drop quite sharply. Why did that drop? Well, because of the US Flash Services PMI actually dropped from 52.9 to 49.7, and that was below the 50 anticipated. Now that's quite a sharp drop. And why is it important? Well, because the service sector is the biggest sector in the US economy, and instead of growing, it's now contracting. That's what this says. And there could be a few things behind this. It could be the different layoffs that are happening in the US, the deportations that are shaking things up. And some people are saying it's Trump's negotiation tactics. He's just upsetting everyone, and that is causing problems inside of the country, but also outside of the country. For example, there was no trade war at the end between US and Mexico and US and Canada. But if you go on social media in Canada, the Canadians don't want to buy US goods anymore. And in the case of Europe, they don't want to buy Tesla cars as much as before. I think Tesla's sales dropped with up to 40% in some countries after Elon did that salute. So there's a lot of things happening and is showing up in the data. So the data for this indicator came up is from, I think it was from the 10th to the 19th of February. So it's just a couple of weeks old. Let's see, right? So I personally think it's going to be a one-off. I don't think it's going to have, more of these below 50 readings. It might be another month, but I think that's it at most, if even that. Because if you look at things like initial jobless claims, you're not seeing any of that weakness. And if you're looking at other indicators, I don't really see it happening. But in labor indicators in general, I don't really see this happening. But yeah, it's not too great with the service PMI dropping below 50. It's actually quite bad. And then you have consumer sentiment. It dropped from 67.8 to 64.7. Now, I usually don't care about consumer sentiment. It's I don't even know. For years, I think for like 20 years or so, that I've been watching the market, people care about consumer sentiment, but it's never really been that important. But it did drop quite a bit, so from 67.8 to 64.7. Now, it might not look like much, but if you would load a chart on that, you'll see that it's quite a significant drop. So yeah, economic data not looking too good in the U.S. My point of view, though, is, and I show you in the charts, I think at one point I still want to be buying stocks. I don't really see the U.S. economy, sort of crash landing or just crashing from like this. Doesn't make sense. So I still want to be buying stocks, but I'll show you exactly at what levels in a few minutes. What else? The Central Bank of Australia cut rates, and it's quite straightforward. Inflation has come down to their target. They think now core inflation is going to reach their target even faster. And the only thing they talk about and giving us a heads up is that the Australian labor market is quite strong. And it's right. If you look at the unemployment rate, it's sort of around 4% in Australia. So even though they have high interest rates, at least the jobs market is not hurt. Now, what's interesting here is that you didn't really see a reaction in the AUD-USD pair, but it doesn't mean you can't maybe short Australian dollar in maybe against the British pound. Why against the British pound? Just to give you an idea. I didn't look at the chart, by the way, but something where I would rather be buying. Why do we want to potentially buy the British pound and sell maybe Aussie dollar and New Zealand dollar? Well, the reason would be because the unemployment rate came in at 4.4%. Same as last month, and slightly lower than expected. And inflation unemployment rate has been coming up from about 3.5% in 2022 up to 2.4 right now. So we're not talking about a big change in unemployment rate despite interest rates being really high. And that shows strength in the UK economy. And even more strength in the labor market is that wages increased by 6% since this time last year. That's a significant increase, which is higher than inflation. The problem is that these kind of wage growth do influence inflation in the long run. So inflation moves from 2.5% to 3%. So all in all, UK labor market is doing much better than expected, and realistically, maybe the central bank is not going to be too keen on cutting rates. Maybe they're going to be on hold soon. That's obviously not the case in Australia, where they're probably going to cut more, and it's definitely not the case in New Zealand, where they cut by 50 basis points and probably going to cut even more, because here inflation is at target. They have a contraction in their economy of about 1.5% on an annualized basis. Well, not annualized basis, but on an annual change. And they think they say this: the outlook supports inflation staying within the band. It literally means we think the economy is so so poor that we will see inflation dropping more, and we're going to be able to cut rates. So if I had to do anything, I would probably look to maybe buy GBP NCD, maybe GBP AUD. I think these are some plays. We had some data from the Eurozone as well. It came in at 50.2, so unchanged from last month. This is the composite. That's your services, that's your manufacturing bundled up into one. It gives you this kind of chart, the blue chart, and you cannot see it, but the histogram shows the GDP growth quarter by quarter change, and it's around 0. And what the data is telling us here is that for February as well, it's going to be around 0. So it doesn't look like it's accelerating. What we can tell you though is the manufacturing is improving, even though it's sort of shrinking at a slower pace, while services is contracting. What can we look forward to this week? I would say Nvidia earnings. Nvidia is going to impact the Nasdaq 100 and stock indices in general. If one wanted to put a position before the earnings, one would need to put the position before Wednesday market close, because after market close Wednesday, the data comes out. What's the problem? What's the risk with this? Well, you need to understand that when these earnings comes out, the market can be up with 10% or down with 10%, depending on the outcome. What's also interesting is that Nvidia on its own is actually recuperated a bit, and it makes a lot of sense. So obviously we had DeepSeek, which is the Chinese rival to ChatGPT, being able to do ChatGPT like or compete with ChatGPT without really needing the advanced Nvidia computer chips. Okay, yet I think it was last week Singapore announced they're gonna buy chips for a silly amount. So Nvidia and the requirements on the company of their products is going to remain strong. So I am overall bullish, and I think this could continue to push to the upside. What else? Well, you have US GDP. We'll watch that, and durable goods orders. But I think what's most interesting on Thursday would be Tokyo Consumer Price Index. Why? Because wage growth is very strong in Japan. They have recent interest rates, and the dollar yen is going down. Why? Because the Fed does not want to raise interest rates, and they're looking to cut, if anything. While in Tokyo and Japan, they're raising interest rates. So we want to keep an eye on this. And then the big headline figure is going to be US core PCE on Friday. What's interesting here is that wage growth is very strong in the US. Inflation is at 3%. So we want to see where this is going to land. And we want to see if the Fed is going to do something about it. Well, given the testimonials of Jerome Powell, the head of the central bank, to Congress 2 weeks ago, they're not going to do nothing. Okay, I think they just don't want to get fired. So if this comes out strong, then yeah, gold might dip a bit, but I still think people are going to be buying because people don't really trust. What else? Did you guys read the article? Or did you read the comment at least? Musk and Trump wants to audit Fort Knox. So for Knox, as you know, is where the U.S. stores a large part of its holding in gold. Hasn't been audited since I think 1975 or something like that, and we don't really know exactly, if all the gold is there. So they need to count it. There's talks that maybe the gold is not there. So obviously, if there's less supply, then prices go up. So that's also something that is causing gold to push to the upside. So very interesting times. Euro USD, what's happening here? So last week I was neutral. This week I'm more bearish. Okay, the level here is holding. If you look at a weekly chart, this whole thing, yeah, if we break above these two levels, we will be much higher, maybe 110, something like this. But right now, as long as trade below these levels, then we can go down to 0.95. If you look at your weekly chart, this is, by the way, a daily, should be like a daily or 3-day chart. So I want to continue to be bearish, and I'm bearish between 104.84 and 105.36. Am I very bearish? Am I short myself? No, but I'm holding lots of dollars after having a terrific last 12 months in crypto. So yeah, I'm thinking of maybe hedging a bit. Definitely withdraw the money I need to use to pay taxes. So I am gonna watch this carefully over the next couple of days, but I think realistically with the fundamentals and everything, I think we can go down. But I'm not putting on like a specific position here, but I am bearish below this level. How about gold prices? So gold prices are bullish. I've been bullish, very bullish since last year when we were trading much lower levels, and I want to continue to be bullish. I think buying dips makes a lot of sense for this to push to the upside. I think people are targeting that 3K level, and then we'll see what happens at the 3K, if it's going to accelerate or if it's going to be a peak. It's 50-50, but we need to just observe, because it's a little bit like with Bitcoin. Everybody's talking about, oh, Bitcoin's going to 100K, and then we reach 100K, and we're supposed to go higher, but we didn't. Here's oil. So oil last week we said, look to sell here on the peace talks. Why? Well, because if there is a deal, then realistically what's going to happen is that Russia would at one point be able to pump up production. So they're producing about 2 million barrels less per day compared with pre-war levels. That's a significant amount. OPEC Plus on their own, where Russia belongs to, by the way, wants to increase oil production by 2.5 million barrels per day, but they want to stagger it over an 18-month period. So imagine that, if they go ahead and increase with 2.5, and then the Russians go and also increase production by 2 million barrels, right? Then we're talking about a massive, I mean, that just shows the scale here, that they want to stagger this over 18 months because they don't want to shock the market. Does that make sense? Now, obviously, if there's a peace deal, oil is not going to go from, production is not going to go from 9 million barrels to like 11 in 1 week, 2 weeks, 1 day. But the way the market reacts, we can still have a bit of a seizable slide on that news. And I think that's what's being priced in. As well, we have US economic data, which with stocks decline, this also came down. Now, there's another thing. I did not verify it. I didn't see it. I just saw it on Twitter. Like, I read like a couple of bank reports, and I read a couple of sort of news articles and things like this, and I do my own research looking at the economic calendar when I prepare this report. Now, somebody says there's a new COVID variant. Sorry to break the news, but yeah, I haven't checked it out, but apparently that's as well. Somebody put that on Substack, I think it was. So there's something happening there, but I think primarily, again, is the weak data we see. What should we do with all this information? I think realistically, we want to keep on selling. As long as you trade below 7689, makes a lot of sense to be bearish. Break above it, and we'll head much higher. But for now, bounces to 75, I think people are going to sell them with stops above, targeting 72 and then maybe 71. Nasdaq 100. Okay, so Nasdaq 100 was stuck in a big range here, and I said looks to be bullish, looks to go long on this breakout. I bought myself, and I was long, happy times, and then we went down. I got stopped out, so not too great. And then the market, after got stopped out, kept on dropping to the downside. By the way, that's how you know if you're putting good stop loss orders or not. If when you get stopped out, the market keeps on plummeting, or if your short keeps on gaining. That's how you know you're doing a good job. And here, I did get stopped out and the whole market collapsed. Where are the best levels to buy here? Oh, we see 20,780. Those are the best levels to buy. Maybe this is going to hold. I'm putting it out there. If it does hold, because it's probably going to go down, up, down, and then spend a bit of time here. Unless it's going to do one of these V shapes. But it's a bit difficult. I'm leaving this out here. There's no rush. Okay. So what I like to do after being stopped out or, lost a bit of money, I like to take a break. Take a break for a couple of days. See how the market is reacting. And then see, okay, does the market start to react the way you anticipated? If it does, you might be inclined to buy. In my case, I'm just laying low because the market was trading sideways last week and the week before that, really, and it's a bit of a difficult time, I think. But yeah, these are the levels. This and this, which are far most interesting. How about Bitcoin? So Bitcoin, I think we had this a little bit higher last week. We said 93-ish, and then price bounced, and then it came down again. In altcoins, it's like a proper bear market in altcoins. And I said it now, it's a bear market in altcoins. It's just a bit confusing because this is not a bear market in Bitcoin. It's still in a massive uptrend. And the preference is still to buy between 92,600 and 88,500, and then for this to go to the upside. As for altcoins, the idea is to buy when this is at low. So when this looks to bottom out, this can go up. But I would be, it's a tricky situation. I got follow some people on X to gauge their input and also gauge the mood. And I can see at least on the altcoins and a lot of these influencers, they're really tired because they're being stopped out or losing so much money, I think. So they're just really moody and they're calling the bottom like every week at least once or twice. They'll be like, oh, this is it, we're gonna go up, and then it fails. And they've been doing that for quite a while. And that's good and bad. The good thing is that when it happens too much and these people are giving up, like they're taking breaks from social media posting, it could indicate that we might be about to find a low. But if you look at the charts, we're not there yet. And that's it. This is this week's weekly market update. If you have any questions, just drop them in the chat. I'm going to see right now as well if there's any questions. Let me just jump on YouTube, and then we can take it from there. And if you are watching this recording, you can always leave comments. And I will check out any feedback later today. Okay, so there's no one there. It's all good. If you have any questions at all,